Hey traders, once again it's TWETV here, and I got a beautiful video for you guys. It's so simple, 5-step trading strategy. So number one, structural bias. Now you're probably asking, well, structural bias, that's kind of simple. That's just plain old market structure. Well, yes and no. Yes, you need to understand, the basics, which are the higher highs, higher lows, lower highs, and all that, and basically the mechanics of it. Yes. But I would suggest that the main objective is to mark out your swing points, to start implementing time frames into this, to basically narrow down your whole trading bias and basically figure out where exactly and why exactly you should be entering the market and what expectations to hold to. So in a case of, something kind of like this, if let's say it breaks structure to the upside, right? Well, our expectation is it's going to continue to the upside. So we would genuinely wait for a pullback. The second part of the strategy is order flow. A lot of the time, people like to resonate market structure with order flow simply because it's so similar with people, let's say, when they're taking trades off of a trend. They're following the trend. The trend is your friend. Same thing in this case, order flow should be your friend. So ideally, when you have a constant reaction and respect of either supply or demand, that means that there's order flow there. And ideally, order flow is there until, obviously it goes the opposite and just completely just sweeps, the previous, let's say in this case is demand, right? So it's respecting the demand and then it's respecting it again. And let's say it's creating another one. If let's say it decides not to respect that and just sweeps all of that, then that's when we could have maybe a supply, right? Maybe it can switch over. So I kind of lined it up like this. So let's say it's kind of reversing, right? So if it's reversing here, then we can kind of look at it as like, okay, demand is being respected, so on and so forth. And then supply just completely just sweeps that. It just proves that that demand is no longer in control. So when we have that, then that's when we could possibly line up another supply and we have that expectation for it to follow. Number three is liquidity. Liquidity in reality, guys, it moves the market. It is what I guess would be the footprints that we need to pay really close attention to. And basically that's going to fuel the market in every which direction, that we know and love. We love the sweeps and we love it to go in our favor and long-term moves and whatnot. And it's constantly being generated. Now, with that being said, it's going to play into S&D transactions, which is the fourth part of the strategy. S&D transactions is very simple. You're literally looking for order flow and liquidity here, right? And if you look at it, it's kind of like you're at the ending of a pullback per se, and you're just basically looking for order flow to be switching, right? And you're connecting the different time frames on what you're looking for, and you're looking for liquidity to be swept, and you're looking for liquidity to be targeted. So it taps into a higher time frame, and then we look at the lower time frame and we look for a transaction between order flows. So in this case, we're looking for a demand to, overtake the supply and then come back to, let's say, respect a demand. So I kind of have it narrowed down like how you would possibly see it. But there's so many different entry models. This is just the really, really basic version of it. And there's so many different ways that it can go, and that's where it comes into different kind of liquidity plays, different kinds of transactions, and there's so many different setups that we can literally develop and take trades off of. Now, number 5, risk management. It's very, very simple. Risk management is ultimately what's going to help you keep the boat afloat, because if your risk management is terrible, things are just not going to go your way. Don't matter how well you're doing. So I have like a little examples and questions and whatnot. I know this looks maybe a little complicated and whatnot, but it's very, very simple. So what you're looking at is, right here where I have both of the examples here. And let's say you have a 70% success rate, right? Beautiful. Now, if you, let's say, have 12 trades, right, that means you have 8 winning trades. Now, with that being said, I'm looking at it as like, oh, if we have a 1 to 5 RR per trade, at least that's what we're aiming for, then that could be a whole 40% gain if out of those 8 trades that we won, out of those 12, we're gaining a whole 1 to 5, right? That's a 40% gain there. So you grab, with the expectation of a risking 1% per trade. That's, average, it fluctuates depending on the kind of trader, but you can look at it as like, okay, so 12 minus 8, because that's the trades, right? So in reality, you should look at it as like, okay, that's 4 losers. So you lost a total of 4% on your account. Now, if you grab that 40% and, your losses, you just walked away with 36% gain. Break it down into numbers. Treat it like a business. So this is when we're going to go into a live market, kind of break everything down, apply this strategy from A through Z. It's literally 5 steps. So let's go ahead and, mark out some plain market structure. We're on the 4-hour time frame here. And little by little, we're going to break it down because now we're trying to build the expectation, right? If you remember the first one, right? If we break it down into market structure, just so we can understand what's going on, understand the ranges that we're dealing with, and understand, the swing high and the swing low per se, right? That's when we go ahead and hop into lower time frame, and we should have one big expectation. If it just broke to the upside and created a new higher high, we should be looking for what? We should be looking for pullbacks. That's the next big thing on our mind. So let's go ahead and just, bounce back and forth real quick through a time frame. But let's go ahead and just mark out the high and the low. I love to do this. I normally trade NAS. I like to set alarms on both sides of the market, just to have a constant, idea of where the market's at, where it taps into. If you mark out the fib, they say if it hits the 50%, that is considered the pullback. Now we're going to go ahead and hop into a lower time frame, and we're going to start looking for entries here. So I'm going to go ahead and, just point out what's kind of obvious to me when you start to apply supply and demand. I like to immediately apply this imbalance, fair value gap, inefficiency in the market. Now, with that being said, I'm going to go ahead and lower the time frame just to get a better view, just to narrow things down. And we want to look for a transaction, right? So somewhere in here, there's got to be a transaction. So let me kind of, make it at least visible for you guys. I'm going to go ahead and mark out this demand, right? And with a demand here, and it's tapping into this, I'm looking at this as like, okay, this is a failed zone. Not only a failed zone, but I'm also looking at this as like, okay, we have a reaction, something to start building a bias, start figuring out and narrowing down where we can take a trade off of. So with that being said, I'm going to just market 15-minute. I like to do that. And with that being said, I want to go ahead and just narrow it down just so I have even a more narrowed down entry. Now, with me doing this, I'm just going to market imbalance. So you can look at this supply demand transaction to a certain degree. And my biggest focus here is to identify liquidity now and wait for the market to tap into it, and maybe mark some that, we notice. Like in this case here, here's a perfect demand that had a reaction. Now with me doing that, right, I'm going to go ahead and put it just as a failed demand. It reacted to it. I'm not going to deny that, but let's go ahead and take a look at the 15 minutes, see how it's looking here. So we definitely have some structure here, but let's look for at least an area to target. So a 15-minute zone, just to, have in the back of our mind, this is where we want to exit, always have an exit plan. And at this point, I'm slowly identifying liquidity. Here we have equal highs. Looks like the market, kind of respected like a little supply there, and it dropped to the downside, but we're not worrying about that. That's the fake supply. You're going to have fake zones that are ultimately are going to be used as liquidity, which in that case, let's go ahead and mark out some trend line liquidity. I mean, back in the day, I'm sure a lot of people are looking at this like, man, I can't believe I used to trade a trend line all the time, and it blows through it after the third point of contact. That's literally how it goes. Flies to the upside because what are they doing? They're hedging right now. They're kicking out the little sellers right there. That's also called inducement. That is another version of liquidity. And that's where we can go ahead and take that trade because it's entering this entire zone. But let's cover, the entire zone, even though we have a narrowed down version of it. Taps into it. Beautiful. And at this point, it really depends on how aggressive you want to be in terms of your risk management. That's already a 1 to 4, 1 to 6. Just aiming for that, you're good. You can ultimately do that. And I just want to narrow it down because this goes to show order flow. Once you understand it to a certain degree, you're going to find it easy. You first have a demand, right? Marked out here. It has reactions to it, multiple, all over the place. Has an imbalance right there, fair value gap, whatever you want to call it. It's being filled. Then it has an actual supply that we should be looking at as, that is a second entry point that we could have done. We can look at that as like, all right, a lot of people probably hopped in on a sell here and immediately, the institutions that saw that or the brokers saw that and they needed to kick some of these people out. And that's how it plays out. And, then there's liquidity to target to the downside there. And with that being said, that's where we could just ride the wave, like Solo likes to call it, riding the wave. That's ultimately what you need to do. I broke this strategy down, from step 1 to step 5. We're literally just applying simple concepts. And for example, here, since it broke that one secure structure, right, that higher low, we can go ahead and move that zone to the bottom there and look at this like, okay, maybe this is the new range, and maybe look for other 15-minute zones to target and maybe look for a continuation. That's literally how you have to play this, and that's literally all you're going to be doing on this strategy. And it's just constantly looking for order flow, and it's going to play off of that as we continue to trade the market. But yeah, guys, if you have any questions on liquidity, supply and demand, POI selection, maybe, imbalances, fair value gaps, how to identify structure, chalk. There's so many different terminologies out there. And my biggest advice to everyone that, is in this, I guess you could call it like a new age in the trading industry. It's so much different compared to when me and Solo first got into this industry. But if you have any questions on this, or sometimes you feel like you get lost in the terminology, I would say just ignore it. Just ignore all the terminology. Find what makes sense to you, narrow it down, make it simple, and honestly just run this trading thing like a business, right? So when you go to, go through the different stages of trading, you're doing what? You're studying, maybe getting a course or a mentor. Maybe you're not. Maybe you're studying by yourself. That's perfectly fine. Very few can do that. But then you're back testing, you're booking everything like a bookkeeper, right? You're taking notes on everything that you do. Pay attention to the very small things that you can definitely, like it can even go down to a trading journal and realizing, oh man, I'm more successful in this session with this pair, trading this strategy, little things like that. But if you need any help, or if you want to join our boot camp or Discord, our link is in our bio. And as always, stay profitable.